Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol, USO. Today we are down 70 basis points. On the 1 hour chart we are in the negative MACD, however we may see a convergence, but I do doubt that. And this support, I do not see us rebounding from this 1 hour support. And on the 4 hour chart we are approaching negative MACD. I do see us turning negative very soon. On the daily chart, we are approaching a possible support on the 18-day moving average, this purple line. So that is a possibility where we may stop in this short-term downward slope. And on the daily MACD, we approach positive. So I'll first mark the 18-day moving average as our first immediate support. And that support also coincides with price concentration that dated back along July and mid-July all the way to the end of July. So that is around a price of $11.34. As for resistance, I do see the 200-day moving average, or this green line, acting as our immediate resistance, as we got rejected back in October 25th and in October 28th. We had down lower since then, and that resistance is at $11.90. So if we were to move on higher, that price movement is roughly around 3.5% to the upside, and if we were to move lower, that price movement is roughly 1.4% to the downside. So let's head to the forecast model. So this forecast model is now available for free in the link below, so check it out. So back to the forecast model, I'll go day by day where WTI crude oil will head to the next coming days. We have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally the model that is the best match to the current trend. We have the current trend right here, and below is the trend that I believe is the best match to the current trend. So let me point out why these two charts are similar. So what we have in the current trend, we start off touching the upper Bollinger Band, and then we proceeded to break down to touch the bottom Bollinger Band. So we have those 2 points, and then after that we reverted back to the mean and approach near the middle Bollinger Band. And we have those 3 points, and right down here we start to see a similar pattern. We start off touching the upper Bollinger Band in the beginning of the trend. After touching the upper Bollinger Band, we proceeded to break down and touch the bottom Bollinger Band. After that, we reverted back to the mean, and we left off where we are at the middle Bollinger Band. So we have about 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the forecast model that we just observed was 2012, or December 26, 2012 to March 25th, 2013. So back then, WTI crude oil was down roughly around 1.5% or 1.4% in the next coming days. So I do see WTI crude oil heading down lower in the next coming days. This forecast model is now available in the link below for free, so check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.